So welcome back, everybody, to another webinar organized by Princeton for everyone worldwide. We're very happy to have Jean-Pierre Landau with us. Hi, Jean-Pierre.
Hi.
Jean-Pierre is from SciencesPo and the former deputy governor of the Banque de France. And he will talk about international currency competition, the digital dimension. And let me give a few opening remarks about money, because money is a fascinating topic from a theoretical perspective. And what is money? And Elon Musk always says money is just an entry in a database. Or alternatively, one could say money is just a societal memory or some score in life. But money is much more. There are many scores in life. And I just listed some of these scores, where you keep track how much you have achieved and how much credit you have. So one is, of course, liquid wealth. You can think of liquid wealth or illiquid wealth. Then you can even think of airline miles. That's also a score. Some game token, let's monopoly money, or some parking tickets, which is negative, but it's also a score. And then you have a FICO score, which gives you credit worthiness, or a social score, it's like in China, keep track how good a citizen you are. That's also a score. And you might also have a score with your spouse. You might have some brownies with your spouse. That's also a score. So all of these are scores. But they're not all money. So it's more than a database, and all these databases can be digital, recorded, but they can also be in somebody's memory, they can be in somebody's brain, or distributed across the brains in society, among your friends. You have brownies and all this, and these are all scores. And that's why I'm very proud of my new sentence, which says money is a score and more, because it's more than just a score. So it's more than just an entry in a database. And the difference is that, with money, you can also buy something. So you can use it as a medium of exchange. And, liquid wealth you can use for that. And it also has some interoperability. You can swap one for the other. So for money, you can get the other things. So you can buy airline miles and so forth. And some other things are segmented. You cannot really buy anything. Of course, you can get some brownies from your spouse if you buy some nice presents or something. But in general, you cannot swap one score for the other thing. So only the scores, money especially, can be easily transferred and swapped for something else. So money is, in a sense, a score in a medium of exchange, of course, a store of value and a unit of account, as we have often discussed in this webinar series. But what I want to focus today is on the interoperability and the scores, and one you would like to have the score separate, segmented from other scores, and when you want to have a interoperability across these scores. And how you keep track of these scores could be with a token, a digital token, okay? Or it can be just in people's brains and so forth. So what defines then a separate digital currency or currency area? So a single currency is essentially a currency where there's the same unit of account, like, stable coins, and you have the same, everything is measured in dollars or in euros or Japanese yen or in renminbis and so forth. And it also some measurements where you have a claim to this anchor currency. So it's a liability of the issue. If you have a bank deposit, it is also part of the currency, because you have a legal claim to convert that into the anchor component of the currency. So there is some interoperability. So a bank deposit, you can always swap into some cash or some other anchor of the currency. And that's why it's part of the single currency. It's part of the euro, part of the dollar, and so forth. Or put it differently, what's a separate currency? A separate currency is, if it has a separate unit of account, like Libra was planning to have initially, now not anymore with Dion. So if it's a separate unit of account, it is already a separate currency. But even if it's the same unit of account, like a peg or a stable coin, it's not part of the same currency if it's not a liability of somebody. If somebody is issuing something which is not a liability in this anchor currency, then it's a separate currency. Classic example in international, you think of the Argentinian currency board. It was one-to-one pegged to the US dollar, but you don't have any legal claim to swap it into US dollar, or they can just change the law and break the peg. So if breaking the currency peg without a legal recourse is possible, then it's a separate currency. So it's essentially, there's no interoperability, there's costly interoperability. You have to pay an exchange fee potentially, then it's also a separate currency. So Alipay, WeChat Pay, and so forth, you always have to pay some 1% fee, and they can increase the fee to 5%, 10% whenever they want. And essentially what you do if you pay within their system, it's a token payment system. So that's how we view these different currency areas, and Jean-Pierre will talk more about this as well. So the other big thing is that everything is now moving to digital platforms, and you can think of many things as platforms, but now it's more the digital platforms, and that has big implications because on these platforms we generate a lot of data. And so the payment structure will be very, very important. So traditionally we have, when we look at finance, we have banks at the center, they have customers, and they give some funds to the banks pass it on to some borrowers and so forth, or the banks create money as well. In the future, the payment platforms will be at the center. So payments play a much more important role, and banking is one of the inputs, asset management is another one of the inputs, but essentially the payment platform is the key and it is at the center. And that changes the whole business models of bankings. It will be much more payment focused, much more focused at the points when there are more data, more information is generated, because data gives you the new advantage in the economy, where you get an informational rent, an informational advantage, and that's really, really important. So how to design these platforms, and if you're a designer of a platform, you have to think about different things, and that goes to some work I'm doing with Jonathan Payne here at Princeton as well, and in the formal model, I think, and how you regulate the currency competition between the platforms. If there are 3, 4, 5 platforms and you can swap currency easily, has implications how platforms will design their structure. So the platform design always has 2 components. It has a market design component. How easy, what's the fee to buy and sell on this platform? Might be even negative, this fee. And it can also, so some markup charges. It could also be that the platform promotes advertising on this particular space on its platform, or it charges something for the advertising. So that's the market design features with all these network externalities of market thickness and network externalities. And then there's some currency design issues or tokens which are designed for this platform. And you can swap the legal currency, let's say the dollar or the euro, into tokens. There might be a fee for swapping from dollars into tokens. And then there might be a fee to get out of the tokens back into the dollar. Okay, that's another feature you have to decide on as a platform. And then you can also, when you have not a stable coin arrangement, so the token can freely float with an exchange rate, you can also generate a seigniorage by deflating the token away. Think of your airline miles. Airline miles, the airlines constantly inflate the value of the airline miles away. Okay, so the interoperability plays a crucial role, how the platform makes all of these decisions. What exchange rate fee to charge into the tokens and out of the tokens, how much to inflate the tokens away, and also how much to charge to really trade some different goods on this platform and so forth. So what are the main lessons from this paper? If you have low interoperability, which means the exchange fee from dollars or euros into the token currency and out of it is low. So in the extreme case, it's perfect interoperability, which means there's no fee at all. You can swap dollars into tokens and tokens back into dollars. So you link them one-to-one, and you could also make a stable coin. So it's almost, like a part of the same currency. And then you don't have this phenomenon that people locked in. So there's always this problem with a platform that, they let people in and then they lock them in and then they're locked in. So this locked in is like this Hotel California aspect. You lure them in, you lock them in, and then once you have locked them in, they have these tokens, you inflate the value of the token away. Okay. So, but it also helps this low interoperability or this, no exchange rate fee. So it's like it limits the competition. So if there's low interoperability, a high exchange rate fee, then there is a limited competition, and then there will be one platform taking over. So it will be a huge concentration in terms of platforms. Now, if you increase the interoperability for regulations and the exchange fee has to be low, then the platform changes its strategy. So the platforms actually then say, instead of making money from the the currency side, they make money from the market design side and switch to a low volume to high markup, to a low volume, high markup business model. Okay, so that's one way to go. And most importantly, when you have high increased interoperability, that prevents the platform from using tokens to redistribute certain features. So if there's high interoperability, then actually everything is dominated. The rich can do more advertising than the poor, because everything is interoperable with respect to the dollar or the euro. If you have a different currency which is not interoperable, you can redistribute your tokens such that you give incentives that even smaller sellers can do more advertising compared to wealthy sellers. And this way you can make the platform more efficient and enhance competition on this platform. Okay, otherwise the wealthy will have always a competitive advantage, and you have then this dominating factor that big sellers dominate, and the platform can manage this separately if it's more segmented, if the payments are more segmented on this platform. So with this little introduction, I would like to summarize the poll results. Jean-Pierre proposed 3 questions, and then we pass on the floor to Jean-Pierre. The first question is now moving much more to the international dimension. Will the central bank digital currency help China to internationalize the renminbi? And the answers were, the 3 potential answers: yes, this will be the main objective. That's the main objective for the Chinese government, to internationalize and go make the renminbi an international currency. That's what 25% thought. And then the second question was, no, digitalization is irrelevant as long as China has some capital controls on. That's what 31% thought. And the third question was, yes, but it is necessary. The main policy objective is actually a domestic one. So the Chinese government really wants to control Alipay and WeChat Pay and so forth. That's what 44% thought. The second question was about Libra. Was it actually the optimal thing for regulators to push against Libra? So should the Libra aspect? And the first answer was yes, that will produce more acceptable and stable payment systems. So they should push again, and at the same time come up with better alternatives. 43% thought. The second B was yes, Facebook should not be allowed to create money on their own. That's 40% thought this. And no, actually, this was a mistake to push against Libra. That because you slow down financial innovation. That's only 16% thought this way. The third question was about the Fed. Should the Fed issue a digital dollar? Answer A was they should actually prepare for it. That's the main focus. Should be 65% thought this. And the second question is there's no need for it. Prioritize domestic fast payments. 23% thought this. And the final answer, yes, urgently they should go for a digital dollar. Only 14% thought this way. So with this thoughts and answers to your questions, Jean-Pierre, I pass the floor to you, and we are all curious to get your perspective on the currency competition in the digital age.
Thank you very much, Markus. This was a fascinating introduction and a very interesting poll. It's a privilege to come up in this seminar after such a long series of very distinguished speakers. So should I share my screen right now?
Yes.
Very good. So maybe the first thing I should say is that 2 years ago, we wouldn't have had this conversation and this presentation. In over 2 years, we had a sort of dramatic change in the way people and authorities think about money, they talk about money, and the way central banks react to it. So I cannot think in peacetime and out of a crisis of a recent period where so much changed in the way people looked at money. And of course, maybe the trigger for that was the wake-up call that Libra represented. So I deliberately called it by its old name, Libra, because it was a real shock, as it was for most of the international monetary community. The shock was triple. First, you had a big size network with pre-existing network externalities, potentially more than 1 billion people adopting a new currency which has been introduced, instantly credible as a medium of exchange. So it was very different from the previous crypto attempt where the functionalities and the rich went up. Here you had a big network, more than 1 billion people. Second, it was cross-border because the Facebook network is cross-border. And third, as you mentioned, Markus, it introduced a new unit of account based on a basket of currencies, which was, as you mentioned, Markus, a direct infringement of monetary sovereignty. So that is the line that Facebook with Libra crossed, that challenged directly monetary sovereignty by creating a new unit of account. As we shall see, this project didn't fly. It was resisted by a lot of pushback by the regulatory authorities, but it is nevertheless a very interesting thing because it has been a test case of the effect of competition on innovation. And even if it never flies, even if that project never sees the day, I think it has changed the world dramatically. You see that in an acceleration of domestic fast payment projects all over the world. Advanced economy and emerging economies are coming up with a project with big infrastructure projects, which will accelerate instant payment by households and businesses. You see that in the increased awareness of the failure or the problems with existing payment system. First, the problem of financial inclusion. I still think about more than 10 million people in the US are unbanked, and so financially excluded from any kind of normal life, and maybe some of them being unable to get their welfare payments or their stimulus payments because they don't have a bank account. And you see that, of course, in the difficulties in retail cross-border payments, which are extremely costly still now, and very difficult to undertake for small amounts. And of course, this is the problem of remittances payment. So Libra acted as a wake-up call, and immediately you had an explosion in interest in the central bank digital currencies. So these are digital currencies issued by central bank. China, as you know, is the most advanced, as we know. It has entered the pilot phase. It has tested the new digital coin issued by the central bank in many cities, and they are talking about introducing it definitively by the end of 2022, that is very soon. More than 50 countries in the world are having research and tests. Many, it's very important, and I'll come back to it, on the emerging world. And then last October, the ECB came out with a report and opened the consultation of a digital euro. So the only, I would say, major institution which has not yet taken a stance on this question is, of course, the Fed. And I'm very interested by the answer to the poll that 65% of people think they should think about it and prepare for it. So the broad questions that we have here, of course, is monetary sovereignty threatened by private digital currency? And Libra was clearly a threat to monetary sovereignty. A lot of people think that with digitalization, China could catch up with the US, not being a reserve currency, but being an international means of payment. Then, of course, there's the question of data and whether it threatened monetary sovereignty, that accumulation of data by private payment system. You mentioned that, Markus. Whether digital money define and consolidate social arrangements. So there's a question of the kind of privacy we are expecting from money, which is very, very seldom mentioned, but in my view, very important. And of course, we are aware that differences in preference in data and privacy regime, and how will that affect financial globalization, the exchange of capital, and the exchange of money. So this whole question of digitalization of money is actually at the heart of the future evolution of our monetary system. I will discuss it maybe in three steps. The first is to start with some concepts and form of currency competition. The second is to discuss private and public competition and private versus public currency and digitalization. And then the big sort of geopolitical and international monetary question, will China overtake the US as a major currency due to digitalization? And I have noticed that the poll is kind of skeptical about that, the people you polled. So there are three dimensions which we can mention in terms of currency competition. It's private versus private. So we are not going to talk very much about it, but of course there's a big issue about banks versus big tech. And this is going to be a puzzle and a challenge for a lot of regulators across the world in the next 2 or 3 years. there is a competition between private and public monies. There's competition in payment or competition on unit of account. There's two kinds of competition there. And of course, this is where Libra crossed the line and triggered that kind of very strong response for authority. We mentioned it. And then we have public competition between sovereign currencies. So I tried to sort of sort this out in a kind of graph here. So you can have digital cooperation on a domestic economy between private and public money, and you can have digital currency competition cross-border, international, and you can think of digital money as being used to actively promote the internationalization of your currency, or as a defense against the possibility of what can be called digital dollarization, meaning other countries trying to use their digital networks to penetrate your economy and diffuse and circulate their own unit of account on economy, which is the definition of dollarization. Dollarization is when people in your residence starts counting, contracting, taking debt with a different unit of account. And of course, reading the headlines of the press, not the poll has been actually very lucid on that. Reading the headline of the press, a lot of people think that the reason why China is actually creating a digital currency is to be offensive and to challenge the domination of the dollar, which may be partially true. But the main two reasons, I think, the 2 and 3, are much more important in my view. The reason why a lot of countries are moving towards central bank digital currency is to protect the role of public money against either private currencies or foreign public money. And it's very significant for me that the categories of countries which are, apart from China, most advanced, most active, and most interested in central bank digital currencies are, I would say, medium-sized emerging economies, which are too big to accept to lose monetary autonomy and too small to have the benefits of size in their private digital network domestic size. And so they are very concerned, I think, to defend their own monetary autonomy. And that's the reason why they would launch those projects of CBDC, central bank digital currency. As you know, Markus, we try to synthesize that with yourself and with Harold Jones in the concept of a digital currency area. And that's a sort of very simple thing. It's an area where it's easier to trade and to pay actually between people inside than between people inside and people outside. And this is, of course, irrespective of any kind of macroeconomic or structural situation. This is not a replica of the optimal currency area theory. It's a very different thing. It's a currency area which is held together by technical functionality, standards, and locking factors by platform that you very well described a few minutes ago. And so it is obviously it can be cross-border, and Libra what it was. And if it sees the days under its new form, it will be cross-border. The border, as you very well said, Markus, is defined by a lot of functionality, which define whether interoperability or not interoperability with other currencies, including privacy and data regulation. And then you can think of several types of competition that this digital currency area will bring to country and country B. Let's say it's denominated in currency A. So let's say Diem, the future of Libra, is denominated in dollar. Then if it penetrates the resident of country B, it will make dollarization of country B much easier. And that's in my view, what a middle-sized emerging economy would be very worried about. If on the contrary, like the initial Libra project, it is denominated, it is own unit of account, then it would expose both countries to digital competition. So this kind of, the idea that those big digital networks that you mentioned create a friction between themselves and the rest with different locking factors is actually the good synthesis of what could happen in terms of digital currency competition. So moving now to the second step, whether competition between private and public money for a country should be a new concern. And that's a paradoxical question, because up to now, governments and central banks are extremely happy with the kind of arrangement which has been working over the last 5 or 6 decades, where you had the private sector managing and issuing private money, bank money actually, allocating credit through that process, so creating money and allocating credit, and the public sector issuing a public money, which was both in the form of bank reserves and banknotes. And of course, all this backed by strong regulation and increasing regulation of the banking sector. So governments have been very happy with this arrangement for many decades. And now there may be 3 reasons that digitalization may destabilize that equilibrium. There is a data question that you mentioned, Markus. There is the possibility and the perspective of a cashless society. And there is a question which is sometimes what you mentioned indirectly, Markus, which is sometimes a little bit taken for granted, is that the fact that we have a uniform currency over our jurisdiction. So that, let me jump on this one. Digital money and data. So you said it, Markus, money, information, memory. Data collection is at the core of the business model of platform, and policymakers are increasingly aware of that. And it seems to me the awareness of policymakers towards the money data nexus is extremely strong now and increasing. So in July 2018, the Chinese government took a very big measure. So Chinese central bank and government took a very big measure. They have those big digital networks operated by Tencent, by Alipay, digital currency network. And those networks were free to deposit their balances, their cash balances, anywhere they liked, right? And so you had that kind of scheme, and that graph is reproduced from the BIS. And starting in July 2018, they constrained those networks, payment by payment, to clear them through a central clearing counterparty chamber, which is operated inter alia by the government. So it has been interpreted by many people as, of course, a way to get the data mining that those operators had, and to get it for the government at a central level. So that is the most important sign that the governments are now, and of course the China government is very interested in data, are extremely aware of the data implication of money and payment. And then I found recently, that actually goes back to 2 days ago, a joint letter by the German Chancellor and 3 Nordic and Baltic prime ministers, which wrote to the EU Commission and said data has become the new currency, a new currency, which is mainly collected and stored outside Europe. So even if technically it's not absolutely correct, it shows exactly how in the minds of senior policymakers, data and networks and data and payments are extremely correlated, and that may make them less comfortable with the idea, with the current sharing of responsibility between private and public money issuer. And my own assumption, but it's very personal, is that the kind of bias that the central banks have now in terms of supporting the banks a little bit versus the big techs, is that they are very familiar with the way the banks are treating data, and they are very confident that the way banks are treating data is in conformity with their own imperatives and their own vision. They are much less familiar with the way big tech is treating data, and that may explain some of the reluctances to accept the full competition of big tech in the field of money.
So can I ask you something? There are 2 rationales for the government to intervene. One would be to say, okay, the big tech firms should not monopolize the data, but they have to give it to the government, and the government will pass them on in some privatized way to more bigger class of enterprises. And or is it more that surveillance by the government? I mean, there could be two different objectives, or the government wants to protect the privacy of the citizens.
Yeah, I think that of course depends on the government. I think we can assume that the motivation of the Chinese government were rather of the second categories you mentioned. That is, if there has to be surveillance, it has to be a government surveillance. In the case of Europe, I think there's a big debate in Europe right now about digitalization, privacy. I mean, Europe has its own standards on privacy, the GDPR. But of course, as that letter mentioned, most of the data is stored elsewhere, right? And so if the authorities are facing the prospect that an increasing amount of data will be collected through payments, then it becomes impossible to think of the organization of payments separately from the data priorities, which in Europe, of course, are very much in terms of protecting the privacy. I don't know whether that answers your question or not.
Yes, no, I think the privacy issue. There's another question by Josh Shear. He would like to know, in China, it's very hard for foreign credit card companies to break in. So it's very much dominated by WeChat and Alipay, he argues. And do you think that this closed digital currency area in China will break up and open up to foreign credit card companies as well? Or I don't know whether it goes a little bit beyond.
No. I think the conventional wisdom, I think, about why China is ahead in terms of digital payments and mobile payments is that it has leapfrogged the card stage. And so the reason why maybe other big economies are still catching up with China in terms of developing mobile payments is they have a legacy system with debit and credit card, which works very well. Right? So the question, actually, again, if I were a bank, I would very much think about that, whether in the future the major payment instrument will be a card or a mobile, and that's a very big question. In terms of relationship with the merchants, I don't think it makes an enormous difference because now we have contactless card, near field contact, which have developed enormously with the COVID. So it certainly doesn't make much difference. But in a peer-to-peer basis, between you and me, having a mobile is very different from having a card. And I used to say, if I invite a friend for dinner, if I have dinner with a friend, either of us can pay with a card, but if we want to share the bill, we cannot do that with a card, but we do that easily with a mobile. So in my view, this kind of peer-to-peer, very similar to cash function that the mobile allows is maybe going to dominate the future.
Thanks.
So now we come to a very interesting question. And again, I think this question may not have fully sort of been considered in all its implication, although a recent statement by the central banks are going in the right direction. What does happen if we have a cashless society? And which is coming, I think, maybe very fast. And of course, the COVID may have accelerated this evolution. From our perspective, a cashless society in a society where the households and the corporates do not have access to public money. There is no more, the only public money which exists is in the form of bank reserves. And other non-bank agents do not have access to public money. So there's a couple of questions that I'd like to ask. I'm not sure I have the answers, and when I asked to people, I'm not sure they found them always interesting or easy to answer. But I think this is very important. The first question is, of course, to whose communication will the general public pay attention when it comes to payment and monetary matters? And I would venture and guess that Jack Ma, before his downfall, would have a much more powerful impact on monetary and financial matters when he makes statements than the governor of the Central Bank of China. He's a much more well-known figure and has a much more power on everyday life of people. So for central bankers and even economic authorities, that's a challenge. Another very different question is, in which currency are we going to be paid back the public debt? Because the public debt is a claim on central bank money. That's how it's defined. It's supposed to be paid back on central bank money. But if the general public doesn't have access to central bank money, how is it going to work? That's a question I've been sort of keeping me awake at night. I don't have the answer. I don't think anybody bothered about the answer. But this is part of the question that we must have ourselves in the long-term perspective if we live in a cashless society. And then there's a big question, it's a transition with the third one. At the moment, as Markus very well explained, the whole system is kept together by public money. We have many forms of public money, but they are interoperable and they are convertible into each other because each of them is converted and redeemable in public money, in central bank money, actually in cash for us. So they are considered equivalent for that reason, and the currency is uniform. But what happens if we don't have cash? Then it raises the much broader problem of a uniform currency. And I'm not going to run very fast on these two first bullet points because this is exactly what Markus has developed in his presentation. All monetary instruments have to be denominated in the same unit of account if we are in a currency area. This tends to be taken for granted, but it's not. Again, what if we don't have cash? And then something which, in my view, has not carried enough attention for monetary authority is the infinite possibilities and versatilities of digital forms of money and tokens, right? So there's a very kind of fashionable concept, which actually has a technical reality, which is programmable money. So you have money on your mobile, but it's submitted to a program which determines how and when you can use it. These are very interesting characteristics. So when you give welfare payments, if it comes programmable money, you can arrange that that money expires in 3 months, so you cannot save it. You have to spend it, for instance. So a lot of people might be attracted by some feature of programmable money of this kind because it may make actually a lot of things much more easier and much more efficient. On the other hand, what if that person would send you money, say you won't be able to buy alcohol with it, or you won't be able to travel with it, or whatever. And so you can imagine that you can program according to very, very different objectives, very, very different imperatives. That's a very different kind of money that we have. Markus mentioned that money should be open, totally transferable. It has an option value. Money gives you, what defines money is that you pay anything, anytime, to anybody. And programmable money may very much go into a very different direction. So I think monetary authority should be very, very worried. We have lived in a system when we had a uniform currency for many decades. We tend to take it for granted, but technology, I think, will challenge that enormously, and it may have enormous impact both on the nature of money and on the efficiency of monetary policy. So for governments, of course, the pressure.
But Jean-Pierre, is it necessarily bad? Let's suppose if a government wants to stimulate the economy and is concerned that the multiplier is so low because people don't spend it, and I give you expiring money, then it can induce essentially a much more higher multiplier.
No, I mean, I fully agree. I fully agree, and I mentioned that, and it has some attractive features. It has also potentially a destructive power because we don't. One unit of money is not equivalent to another one, and then the nature itself of money is lost. You know, the kind of universal, again, paying anytime, anything to anybody, and so. If there are restrictions, of course, then you have the question of what kind of criteria for restriction, and then you have to wonder what has become of the money system itself.
So if I take food stamps in the US, for example, that would be such type of money where I can only buy food with that, and I can swap it, I guess, on the black market. There's some interoperability.
Yeah.
Or is this?
Yeah, but most likely if you swap it, I guess sometimes you would have to accept a discount. So that's the difference between your food stamp and money. Your food stamp, you're not sure that tomorrow it will have the same nominal value than today. Mm. And precisely when you start fragmenting the forms of money through programmation, the question of nominal value becomes extremely important.
Yes.
And
the other thing which comes to my mind, if I may, is the free banking era, where, you know, in the olden days in the 19th century in the United States, each region had its own main banks. And if you were traveling to another region, you came with the wrong banknotes, you had to swap them at a discount. So that's a loss of uniformity of currency in a sense.
But that's fascinating, because precisely you would have thought that digital networks would eliminate distance, and they do. So the kind of diversity and discounting that you mentioned was due to physical distance. Yeah. And money was constrained by physical distance, right? So you would think that digitalization eliminates distance. You can send digital bits instantly all over the world. Mm. So you would think it goes in favor of a uniform currency. And that was the gamble of Libra, a uniform currency cross-wide. But then you have this kind of additional possibilities to have very versatile and changing token. So the paradox is that technology, at the same time, it eliminates some factors of segmentation in the forms of money, introduces others. I think it's a very interesting point, actually.
And it might be desirable into some features. As I mentioned, in some platforms, you might want to favor competition. And in order to induce competition, you distribute your tokens in a particular way.
Yeah. It may be very interesting from a micro perspective. You have to wonder what monetary policy becomes, because there are two basic assumptions in monetary policy before we start talking about how it's operated. And one of those assumptions is that you have a uniform currency. And actually, my understanding is that central banks deploy enormous efforts, especially in the euro area, so that €1 somewhere is €1 elsewhere, exactly the same. And that technological evolution may lead to a different direction. It may have a lot of micro benefits. How the system would behave in the long run once we don't have a uniform money is a very interesting question. I just don't think it's enough discussed right now. Should I?
Let's. I mean, there are a lot of questions, but I'll try to condense them at the end. Otherwise, we get in time problems.
So for governments, the pressure is immediate, and they cannot be defensive only, right? They cannot impede technology. So they don't want private money to take them over, but they cannot impede technology. And they feel it's their duty. It's a quote from John Cunliffe, the deputy governor of the Bank of England. They must give people access to money, I like very much that sentence, in line with their preferences. That is the moral duty of a central bank, is to give people money in line with their preferences. And therefore, it seems to me over the last 2 years, they have adopted a three-pronged strategy. They have increased regulation. They have started thinking of issuing their own digital currency. And I won't mention it, but they have pushed very much the acceleration of fast payment. So let's look at the two first. The government strikes back, and the empire strikes back, right? And very much so. So China, of course, as I mentioned, introduced the central clearing for digital money. And there has been the whole saga of the downsizing of financial in the last 4 months, actually, 4 or 5 months. It has been framed as a regulatory issue, as a competition and a financial stability issue. I would just only note that it's not challenged, that the final decision to cancel unfinancial IPO and to downsize the whole project has been taken by the president of China himself. So it's hard not to see that as a reaction of the sovereign against the digital network, money network, which had certainly been seen as incompatible with the sovereignty, right? And of course, Libra has been multiple pushbacks by regulators. The new unit of account is for all purposes abandoned. They have changed the name, and the new name DM will be denominated in sovereign currency. So we're back to something much more acceptable and palatable for monetary authorities, which is a payment system using the official currency. It may be cross-border. So remember my scheme at the first. It may help digital dollarization. So if I'm a resident of one of the major countries in the world or something, I'm not worried. But for others, it may create a pressure on the domestic currency. And of course, the second, and as I said, the second is the creation of central bank digital currencies. And the academic and analyst literature, there has been a lot of speculation over the last 3-4 years. What could be 2 years about what could be a central bank digital currency? So could it be, of course, programmable? Could it help carry negative interest rate? Could it have monetary policy? And in the spirit of what I just said, I think the main objective for a central bank digital currency is to protect and keep the role of public money in the economy. And I've had comfort in the quotes, which have been, all the free quotes here are very recent, and they go back less than 2-3 months. Access to safe, publicly issued payment option. This is exactly what I'm saying. Keeping the role of public money, giving European easy access to a safe central bank money. It cannot be more explicit than that. This is the ECB report of digital euro. And of course, at the end, there is a kind of very small aside, which will fuel the third part of our discussion. It would also contribute to financial sovereignty and strengthen the international role of the euro. So that's a statement by Panetta, Fabio Panetta, who is a member of the executive board of the ECB.
So Jean-Pierre, can I ask you, it could be that in the future people like programmable money a lot, and because they live on platforms primarily. And then if the central bank is offering a non-programmable money, it might not be so attractive after all. Is this a danger as well if you make your public money non-programmable?
I think this is an extremely interesting question. I'm pretty sure that people will like programmable money. And I think this issue is not discussed right now, but the central bank will have to decide whether they will outlaw them or not. That's and whether they will defend the uniform currency. I think there would be a better place to do that if they don't deny the citizenship all the benefits of a digital currency. So that's why they are now pushing for the CBDC. And I think having functional, performant, competitive digital currency matching the functionalities of private digital network, that would put them into a better position to refuse some of those developments. But of course, if you argue, I will defend cash versus all these functionalities, that is not a sustainable position, at least in a democratic society and even in other societies. So I think the strategy now is perfectly clear. We want to have a public money which is competitive with the privately issued money, provide the same functionality, the same easiness of use, and the Chinese government is advertising on that very, very much. And then I think the question that you mentioned here, Markus, will have to be debated. It's a very fascinating question because it goes very much beyond. I mean, there is an efficiency aspect to it, preference aspect, but it's hard to figure out what monetary policy would become without a uniform currency. I think it's a very interesting topic for research. I don't know whether I answered the question.
Yes, I mean, essentially how much segmentation you should allow, and then you need some good reasonings for have this non-interoperability essentially.
Yeah, exactly. And who should decide?
Yes.
Who should decide which segmentation is good or not?
And you think it has to be a regulatory decision rather than the markets, or you let essentially play it out for now and then regulate later? Should you have a regulatory sandbox at this stage, or we don't know yet? We have very limited understanding how to regulate or design that.
Okay, let me just think aloud on the top of my head. You surely have a consumer protection issue, right? So if you hold a programmable money, you must certainly be aware of its characteristic. You don't want the money to vanish from your mobile tomorrow without you having been warned about it. Yeah. So there is a lot of, even under that angle, I think the regulators have a lot of things to do, consumer protection, right? Mm-hmm. Privacy and so on. And then you have the macro question. And so my gut reaction would be, no, you don't allow it. You don't allow it. Everything which is money should be money. Now you can allow saving products or investment products with those characteristics as long as they are not supposed to be used as medium of exchange. But so you can think, I mean, you're better placed than anybody, of a programmable store of value.
Yeah, but so what I'm struggling with, I'm offering a programmable token. I don't call it money. There's still the dollar out there or the euro out there. Would you outlaw this programmable token, even though it's a very convenient thing for citizens to have? And
well, is it denominated in my unit of account or another unit of account?
It is denominated in your unit of account, but it might, you know, when the sun is shining, it gives you more. If it's raining, it gives you less. It is contingent on various things.
I would not qualify. I would not accept to qualify it as money. I would not give it legal tender. I would not. Definitely not. So it may be a hedging programmable instrument, yes. Accessible to individuals. And then you surely have a point that it might be a huge progress actually to have this kind of options open to individuals, right? But I would not call it money, and I would not support it as a medium of exchange. It can be a tradable option instrument.
Yes. Okay, good.
It's a very interesting question. Huh? So here you have okay. And of course, now that they engage into this field of creating their own digital currency, I think central bank will face big trade-offs and social choices. One where they are very much aware with is that they don't want, and it's pretty clear from their recent statements, they don't want a central bank issued digital currency to disintermediate the banks. So that is almost a universally accepted objective, whether it's a long-term, short-term, but it's almost universally accepted. The second point, and here I'm going to make a more personal remark, is the issue of privacy. Right? If we have something which is actually the replacement of cash in a digital society, cash gives us a certain level of privacy, and especially privacy for small payments. Nobody is arguing that large payments should be made private for many reasons that we all know. But a few €100, should I have privacy or not, right? And here I could not, this is my personal remarks, I could not help but quoting this wonderful sentence by Dostoevsky, which is, money is minted freedom. And then he goes on and says, even the poorest of person, if they have money in their pockets, they are a free person. So it's an extremely important thing. And I'm afraid that this issue of privacy is not going to be discussed as much as it should, and by the right people. I remember a former colleague from the central bank telling me, you know, don't quote me, but this is not something we should be decided by central banks alone. So I'm a little bit sort of concerned that they're taking a very benign approach to that question of privacy. Here you have a poll which has been published by the BIS recently about the preferences regarding privacy, and obviously they are very different according to countries. What is very interesting is the question of the poll, and they are not the quality of your questions, Markus. I would be comfortable with my main bank securely sharing my financial data with other financial intermediaries. Of course, I mean, but the real question, I try to figure out the real question of which should challenge me. The government has issued strong guidance that tobacco is bad for your health, right? Which is absolutely true. I would be comfortable, the government, knowing that I spend 50 euros a week buying cigarettes. Yes, no. That is the real question it's not the question whether my credit data should be shared with other financial intermediary or even my insurance company. The question is, in the society in which we are, where most retail small payments will be made digital from mobile, do I want the government or the issuer, by the way, anyway, to know that I'm spending $200 a month on tobacco? That is the issue.
I mean, there's a technological issue as well. How to keep it private also with respect to the tech company too, no, in a sense.
Yeah, no, absolutely. It's not a public, it's not only a public issue, but of course, surveillance by the government and data appropriation by companies are maybe two different things. They are complementary, but they are different. Mm. And you know, we have countries which put on social scoring, right? Yeah. So then, so you put social scoring together with programmable money and no privacy, you are in a totally different environment in terms of your payment environment. So coming now to the last part, am I too long, Markus? Maybe, no?
Oh, we are fine. Mm-hmm. We have to come to the last part. We are running at the limit, but we can still go on.
So let me skip over that slide. Obviously, an international level, the game is different. And we'll make what is presented as a thought experiment, which is actually not that fun. We imagine that one currency has an established position as international store of value. So that could be the dollar. And another currency has comparative advantage in issuing a digital money in large networks with already hundreds of million participants. That could be China, right? And we wonder, and this is the key, the question that everybody has in their mind, which currency will dominate as a unit of account in the future? And which is the one will influence most global monetary and financial conditions? So a little bit very basic analytics. Money is all about scale externalities, of course. Money is not useful for me if I'm the only one to hold it and use it. And the more people use it, the bigger its marginal utility is. So these externalities of scale, they came in two forms, either in the form of network externalities, and that money as a medium of exchange. And this is kind of network externalities that big network as Facebook are trying to exploit, actually. Or, and this is less often sort of presented as such, liquidity externalities. So money, this is the reserve function of money as a store of value. And very broadly, I will assume that the more people are using it as a store of value, the more liquidities, and therefore there are liquidity externalities at the use of money as a store of value. So that gives sort of rise to this graph. Scale explained, by the way, where we have a limited number of international currencies. So when you let the economic speak, not legal tender, not government power, nothing, scale impose itself. And that's why we have a limited number of international currencies. And scale can be gained either through network or for liquidity externalities. Network, it is a medium of exchange, liquidity reserve store value. And the question, of course, is how this plays together and which one will ultimately structure the currency zone and determine the unit of account. Right. And
so this liquidity externality is like a Bewley type safe asset role. Is that similar?
Yes, yeah, I think so.
Yeah. So the more people participate, all idiosyncratic shocks are more easily
exactly
washed out, and that's why it makes it a better.
And actually, my opinion, I mean, it's not a fully informed opinion, but my opinion is that when people make comparison with the 1920s, you have very few countries active participants of the international monetary system. So the reserve accumulation process and the reserve behavior, which existed, of course, was very different from today. Today, you have maybe 20, 30, 40 countries which are maybe more active participants of the international monetary system. So the liquidity externality of reserves, in my view, is much stronger than it was. I'm very happy that you make that remark, because this, in my view, but that's my personal view, it prevents us from comparing today to the 1920s, which a lot of people would do. And I come back to this immediately. So the most recent framework and elaboration is, that we have is a paper by Gopin and Stein, which goes back to 2018, which elaborates on the so-called dominant currency paradigm. And what they say is, of course, that there is a strong complementarity between the store of value function and a strong synergy between the two and the medium of exchange function. But they establish, or they assume in their model, that dominance comes mostly from the medium of exchange to the store of value. So the causality is clearly in their model, as I understand it, but they spell it very, very clearly, from the medium of exchange to the store of value, with some additional feedback. Once the store of value function has been established, of course, then trade financing and vehicle currency functions can develop, because there is a liquidity and safety premium attached to the dominant currency. But the initial causality is from the medium of exchange to the store of value in their model and in their approach. And they explicitly state that it creates optimism from China becoming an international currency. They say it exactly like that, on the basis precisely of digitalization. And they quote a former 10 years ago paper by Ash and Green, which says logical sequencing is the following: invoicing and settling trade. So medium of exchange, a unit of account, used in private circulation, vehicle currency, and then used by central bank reserve. So this is the causality which dominates, I would say, the current state of the literature, and that gives optimism for China to use that digital power to internationalize the currency, everything else equal. Now, if I may raise a few questions, it seems to me that the way they establish a causality between the medium of exchange function and the store of value is that they look at the store of value essentially as a buffer of liquidity between transactions. So the logic is simple. If my transactions are invoiced in a currency, then I would need a buffer between transactions which is in the same, denominated in the same currency. And so they look at the reserves and the liquidity store of value function under that very, very specific aspect of a buffer between transactions. But that is not why people accumulate. That is not why we have a 5, 6, 7 trillion of foreign exchange reserve today. It's not for buffer. We have 5, 6, 7 trillion reserve today because of precaution motive. Countries accumulate reserves because they want to preserve their option value and for motive of precaution. And there I would say, this is my own personal opinion, so it can be challenged. Here I would say the liquidity externalities which I just mentioned and which are very different from the 1920s may play a major role, and they may reverse the causality. So you are a medium-sized emerging economy, you want to accumulate reserve as safe assets, just as Markus said, as precaution. And of course, once you have in your country balance sheet an enormous amount of reserve denominated in one currency, then it's much more rational to start using that currency as a vehicle currency for borrowing and lending, and then to invoice in that currency to minimize exchange rate risk. So I think we should have a conversation about that, because it is clearly what will determine whether China will overcome the US or not. If it doesn't, I think the asymmetry in favor of the dollar will subsist, and it will still give the power to drive the global financial cycle. Now, there's one point, of course, where having a payment instrument denominated and using your own currency is extremely important. It's not a monetary point, but it may allow China to escape, and a lot of countries to escape political dominance. What the sanctions do is actually paralyze your trade system. So the sanction is paralyzing the payment in the dominant currency. If you can at least escape for your payment system the use of a dominant currency, you may limit the non-monetary power that the dominant currency has on you, and you may escape the sanction. That's my assessment of the China situation. They are the most advanced in the pilot CBDC. Their two networks, as Alipay and Tencent, they develop their international operation, but most of those operations are not in the renminbis. They are in domestic currency. So they export their technology, but they don't export their, the core of their payment and the denomination of their currency. And for the reason that, Markus mentioned and the data question, it is expected that their international expansion will be slowed down enormously due to geopolitical tensions. I mean, they are going to meet the same kind of obstacles that Huawei meets, and people are going to be wary about the data transfer. China is progressively setting up a payment infrastructure with an international renminbi. So it is designated clearing banks, because if you want to make payments, you have to make clearing banks which operate in your domestic currency. So there are many clearing banks which are designated in Hong Kong. It is well known, it's establishing bilateral swaps with a lot of central banks. And it has recently entered into conversation with SWIFT as to the way SWIFT could be used, the renminbi in its messaging system. What struck me when preparing this, I tried to check whether the expansion of Chinese loan in Africa and in an enormous in poor countries and emerging economies, the Belt and Road Initiative has been used by China, as I would say common sense would dictate, to promote the renminbi. And actually, it's not. It's not. My understanding is that the overseas lending by Chinese official authorities is still 70% denominated in dollars and only 10% in renminbis, the rest being other currencies. So I think China has a very sort of determined but prudent approach in terms of digitalizing currency, with, again, priority to the domestic motives. And the conclusion are there. I think in the immediate future, currency competition will be defensive. Emerging economy will be the most active for the reasons I said, and they are threatened. We talked a lot about Libra, but WhatsApp, which is another Facebook subsidiary, has been allowed to operate a payment system in India. It has asked for an authorization in Brazil. So these are two big emerging economies. And I would not exclude that Facebook has chosen to sort of change the strategy and push for local solution in developing payment system rather than that big project that Libra represented. And of course, political consideration and data privacy regime will ultimately, I'm repeating myself, determine the shape of all this. Thank you very much, Markus, for the opportunity.
Thanks a lot, Jean-Pierre. So there are tons of questions. So let me just group them into two. One is, you didn't mention crypto or Bitcoin at all. And there's a lot of questions also about how will this new money impact the valuation of other assets? Is this totally orthogonal to it? So there's, on the one hand, there's this Bitcoin and crypto aspect. On the other hand, should be, will new money also impact the valuation of regular stocks and other normal assets if, they're promised then some dividend payments, not in dollars or euros, but in some digital potential programmable money? Do you have any thoughts on this? Or?
Okay. So on Bitcoin, I saw the question even before I started, would I accept or use Bitcoin as a payment instrument, right? And my answer is in one case. And the example I always give, I mean, figure you are a Mexican parent and you have a kid who's studying in South Korea. So I picked up two exotic currencies, right? So currencies that you cannot convert into each other without doing a double exchange operation with the dollar. So sending 1,000 euro is going to be very costly and very long. Now, if your kid needs those 1,000 euro tomorrow, you use the Bitcoin. So that is the niche system where the Bitcoin and where Libra could have gone in. Bitcoin is very, very complicated as a payment instrument, but it has that niche that in those very special points where the banking system is very difficult, cross-border small payments, then it may be useful. So that's the case where I would it. Now, evaluation of stock. I mean, there are two questions here, right? The first question is whether financial instruments will be issued. Suppose Libra had seen the day, whether at some stage they would have issued financial instruments. So go beyond the payment function and try to establish a true monetary system. That is something I've been thinking about, and I'm not sure I have any kind of definitive idea about that, because they would hit the problem of liquidity, lender of last resort. So as soon as you get out of a pure payment system and you start doing maturity transformation, issuing long-term assets, then you have the question of the lender of last resort which comes up. Otherwise, you're exposed to a lot of crisis. So I don't know about that, and I'm not sure that is a reasonable prospect in the immediate future. Will that affect the price of securities denominated in another currency? So if we make a kind of very simple reasoning, in the way Libra was constructed, marginally, I would say, because what Libra was doing is to issue inside money, actually. Inside money, backed not by new loans, but by existing assets. So Libra would have liquefied existing assets. So it may have introduced another liquidity element in the asset pricing, but that could have been marginal. Otherwise, I can't see how it would have affected marginal the pricing of assets. Even the revised version of Libra, which is Diem, would raise enormous financial stability consideration. Because you can see it as an enormous, some people would say an enormous money market fund, issuing a liquid liability and invested into less liquid assets. Some would call it an ETF, depending on the assumption that you make about the condition over which Libra could be converted into financial assets. So I think now, and pretty clear from their statement, now that have pushed back against the new unit of account, the regulators are going to look at the financial stability impact, which is huge. And relating to the question, of course, if you have, even for Diem, let's say if you have 100 billion issued by Diem, it gives Diem an enormous imprint on that market. And regulators are legitimate in asking themselves whether how that imprint will translate into the dynamic of the market.
Yeah, so let me ask you a final question, and then we always end with a positive note. And of course, everybody talks about inflation these days, and this new competition across these currencies, digital currencies or traditional currencies, is then Hayek essentially saying, oh, this will actually make it much more difficult for central banks to allow higher inflation because people will run into this new digital form of currencies. I run out of the dollar into DM, or not DM euro, or DM something else?
Oh, I think the answer is yes for countries which have a low credibility, historically speaking. Absolutely yes. And even if it's designed as a payment instrument, depending on the functionality, it could serve as store of value for many households who don't have that high savings. And then when it serves as medium of exchange and store of value, the temptation to start counting, denominating your wages and denominating your debt is very much so. So the answer is yes, it's dollarization powered. It's a powerful way of dollarizing an economy. And to the extent that an economy is vulnerable to dollarization, yes, it will have a disciplining effect, at least a competitive effect on the management of the currency, definitely.
And what's about our positive ending note to end? What's the positive outlook? Do you think the whole transition we go through, that's actually a good development? It will make the whole system down the road more efficient?
I think if we solve the privacy dilemma, which I think is very important, if we keep aware that money is freedom, this is the essence of money. if we consider money, I would say, pardon me, Marcus, the German way, this is not only an instrument, but something which must be defended and protected. Then we'll have a chance to have the best of both worlds, yes, to have a very efficient system, very open, globalized, and still happy. You know, I think the best-selling argument, and everybody says it now, is that how come I send an email to my friends all over the world, I cannot send them 20 euros. So if we can do that in the conditions which are safe, respect our privacy, I think it's a very, very positive and powerful evolution.
Thanks a lot, Jean-Pierre, for a fantastic talk and a little glimpse into the future. It's good to know what's coming up and predict the future. Of course, it's difficult, but it gives us a better now framework how to think about these things. Thanks again, and talk to you soon.
The opportunity.
Thanks for all the participants.